Hey everyone, me Kevin here, coming to you on autopilot to talk about what this week has in store for us regarding the Federal Reserve, inflation, and other considerations. Let's get right into it. The first and most important thing that I'm going to be paying attention to this week is, of course, the Federal Open Market Committee set of minutes. Those will come out on Wednesday morning, so mark your calendars for Wednesday morning. We'll be able to find out what that discussion was around going 50 for the Fed, and are we going to get any hints or suggestions as to maybe getting a repeated 50, or are we just going to get that continued data dependence? Which, remember, those headline job numbers that we just got seemed really good. But yesterday we did a 27.5-minute video breaking down why those job numbers were entirely baloney. It's not until you actually get like 100 pages down into the jobs report and all the way down into table alpha 8 that you end up realizing that, yes, while the establishment survey removed the seasonal spike of teachers going to work, the household survey did not. Or even if it did, it still somehow showed a seasonally adjusted positive 785,000 jobs, which is crazy for September. And it's also historically unprecedented to see an adjustment that high, which suggests that the data is likely to get suggested substantially down, potentially a lot more than we've ever seen before. Now, we know that Jay Powell and the Federal Reserve Board are probably already expecting some of the job numbers to get revised down. And the reality is, even if the job numbers are revised down by 50%, they're still good. You'd still have 120,000 or 125,000 jobs from the 154 or whatever that we got, which is incredible. But the real question is, what happens if you remove that crazy $785,000 job gain for government employees on the household survey with the seasonal adjustment already adjusting for teachers? Well, what you end up getting is a 4.5% unemployment rate, not a 4% employment rate, which is much closer to recession than, frankly, this unemployment report lets on. So we'll see. I don't know that this FOMC minutes set will really tell us anything other than, hey, we're expecting to be data dependent, but I'd like to see some commentary on revisions, and I'd like to see a little bit more commentary on their confidence that inflation is indeed going to come down, even though we did see a little bit of a pull forward in September. Now, I want to talk about September because this is an interesting one. But quick note, yesterday we had a mastermind, and one of the folks in the mastermind's like, yeah, I'm a wholesaler. This is a great group of entrepreneurs, by the way. meetkevin.com/mastermind. We meet, once a quarter. Great group of entrepreneurs. And one of them is a wholesaler. And they mentioned, I got calls almost daily saying, hey, the port strike's coming up at the beginning of October. Make sure you order enough inventory in September so that you don't run out and have bare shelves. And it does make me think that there was a substantial pull forward of demand into September because of those port strikes, which likely contributed to the skewing of this data. Now, obviously, we're going to get hit because of the hurricane adjustments. We'll see in October. Hurricane Helene's a disaster. It's killed over 226 people. It's terrible. Now, Tampa and Fort Myers, that area is going to get hit again by another major hurricane. This is just absolutely crazy. It's a horrible time in the environment. And for whatever it's worth, I should just quickly mention, so my team doesn't get mad at me, that yes, we do have a coupon expiring tonight. We are going to do the largest price increase ever after this coupon expiration. So if you want to be in, get lifetime access to all of the course member live streams, lectures, the archive, the fundamental analysis, the trade moves, portfolio change, you name it, check it out. Be the first to know over at meetkevin.com. A lot of people buying that Stocks and Psychology of Money group, and a lot of people bundling it with real estate or the gold productivity course. Check that out. Okay, so I'll link down below. But after we get this FOMC data set on Wednesday, we're also going to get the CPI report. Now, CPI comes out Thursday morning at 5:30 a.m. As usual, I'll be live on the Meet Kevin Market stream. We're expecting CPI to come in at 0.1% on the survey. Prior report is 0.2. This will be great. Might take some pressure off those bond yields. Those bond yields going up 25 to 35 basis points after the Fed cut 50 is insane. Core CPI is expected to come in at 0.2. That's averaged down from about a 0.24-ish estimate, prior being 0.3. CPI year over year expected to come in at 2.3 versus prior of 2.5. And CPI year over year core expected to come in at 3.2 versus 3.2 on the prior. So overall, that's going to be the data set this week. We will obviously get real hourly wages, which is because you take the CPI report and then compare it to wages. That's not a big deal. We'll get initial jobless claims as well. And then on Friday, October 11th, we're going to start bank earnings. Big deal to get some insights into that Q4 forecast. How are the consumers doing? More delinquencies? Are we getting credit card defaults? Are we getting more pain on the consumer or not? Did we see a weird spike in September because of some pull forward and then all of a sudden a crash in October? This is going to be some of our early warning signs, if there are any warning signs. And we'll also get PPI. PPI is expected to be mild as well. The producer price index report, that'll come in at, or expected to come in at a 0.1 survey, prior 0.2 on the month-over-month core, looking for 0.2 versus the 0.3 prior, much like the previous report, except the year-over-year is expected to come in at 1.6 versus prior 1.7. Year-over-year core 2.7 versus 2.4 prior. And I mean, look, the manufacturing industry is in substantial decline. Friday we'll also get University of Michigan sentiment, but manufacturing industry is basically facing just straight up deflation. So I wouldn't really anticipate, a big painful PPI read. Maybe you could end up seeing a miss to the upside on CPI solely because of that pull forward that we saw into September. But honestly, I think that pull forward into September is going to lead to a crash of jobs in October. We won't get that jobs report, obviously, until November, but we might see some spikes in some of the initial unemployment claims, so we'll have to pay attention to that. And then on top of that, you've got to consider that seasonal adjustment is absolutely insane. See, remember for a moment, normally when you have a bunch of teachers going back to work, you have a non-seasonally adjusted number spike, and then they revise that down with the seasonal adjustment. That would be expected. And they did that in the establishment survey. They're like, oh, we have like 500,000 teachers, and then they adjust that down to 31,000. Cool. But in the household survey, which actually calls workers, somehow we seasonally adjusted, added 785,000 government workers, and that's compared to the non-seasonal adjustment of almost 1.4 million workers. Where did all these freaking government workers come from? Again, this is where a lot of people think maybe there's election bias or whatever, but I do think this week we'll get a lot of insight on CPI, an early read on earnings, a lot more earnings obviously next week, and obviously the Fed minutes. I'll be covering all of these. I'll definitely be covering these minutes as they come out. Really big deal, and I really look forward to covering those. I actually have an appointment that I have to get to at 12, so I'll cover those for about 30 minutes on Wednesday since they come out at 11, and then I'll dip. And look, whatever happens, I'll be there with you. I'll be there for you. I'll do my best to provide the information as factually as possible. If you like my information, check out that expiring coupon code. We will increase prices, the largest we've ever increased prices before. We've got some great things planned for course members. We're very excited about that. So if you want to lock in that price before that jump, make sure to do so. Link down below before 11:59 p.m. tonight. If you have any questions, email us at staff@meetkevin.com. I appreciate all of you. Thank you so much for being here. Thank you, Autopilot, for driving, although I've been watching the road the whole time anyway. That was why it hasn't been beeping. Now Elon's got this whole autopilot thing where if you're not watching the road, it will beep, which is actually great. I kind of like it. I don't have to wobble the wheel anymore. I always thought that was kind of unsafe. But, and highway, it's always been pretty good anyway, and I leave I always set it for extra distance too. But anyway, that's just me. Thank you so very much for being here again, and folks, we'll see you in the next one. Oh, mind you, Thursday, we'll also get the Robotaxi event there. Woo! Stay tuned for my Tesla video. That's going to be a big one. Talk to you soon. Bye, everyone. Max, you want to say bye? Bye.